Good morning. Welcome to today's Trading European Open live here at the Live Trade Room. If I just take the screen back. Now today is Wednesday the 24th of October. So we are, yesterday we've experienced a particularly, I suppose, momentum filled trade for probably half the day and then kind of experienced relatively extreme pullbacks across the remainder of the trading session. Obviously, conditions like that make it quite difficult for certainly traders like us. So a mixed bag yesterday, ultimately, across the board. And what we are is we're professional traders trading with live capital every single day. So what we're experiencing is what you can experience over the course of this session is our ability to identify high probability trading opportunities. Of course, trade selection is a big issue for traders. So many markets to choose from. How do we choose the markets that we like to focus on? Then what we look to do is to execute our trades, or look to get into those trades with a high degree of consistency in our approach. So you'll see us looking for similar trade setups all the time, and that's with a view to manage those trades with a high degree of discipline. So what we're eager to do is to mitigate risk as quickly as we can and try and get into some significant winners and let our winners run. So cutting our losers short and letting our winners run is a fundamental part of this particular trading session, with a view to book in consistent returns, certainly over the medium and longer term. So without further ado, we are facing quite challenging trading environments. There's a lot of tailwinds. There's a lot of sort of geopolitical risk and fundamentals really impacting a lot of these markets right now. So do bear that in mind. Please do take a brief moment, familiarize yourself with the risk warning currently up on screen. Okay, so before we begin, let's do a quick review of potential market moving news. So for this, we'll get up our trading platform. Sorry, let me just make a slight amendment to that. So let's get up our trading platform. Sorry, our news platform. So this is Forex Factory. This is where we sort of get our high impact news. And as you can see, we're really interested in kind of the red news events, the high impact news events. And we have the Bank of Canada today. Now we do have a lot of manufacturing and services data over the course of the morning. It's really, we very rarely get massive significant deviations off these numbers, French, German, and European data coming out. So we normally get levels that are pretty close to these, and unless we get a strong deviation across the board, it's not really that likely to give us significant movement. But we will monitor it, of course. Now the Canadian dollar at 3 p.m. London time, or UK time, is the Bank of Canada. They're releasing their monetary policy report, rate statement, and the overnight rate as well. But the big thing to take into account is the fact that there's an expected 25 basis point increase to the upside. So going from 1.5 to 1.75. And to just draw your attention to the fact that the last time the interest rates were at these levels was back in October 2008, so right in the peak of the trauma that we saw back in 2008. So what that suggests is we're in a rate hiking environment, certainly as far as the CAD is concerned, and that's likely to impact it positively. Now, of course, every session we always talk about the news events, which are important, but there's also some major geopolitical fundamental drivers pushing these markets. And to just touch upon just a few of these: global trade wars between US and China, Brexit negotiations, impacting the euro and the pound, and of course there's fears and concerns about US equities as a result, and the FTSE. So there's the impact is broader. We obviously have some issues now with fundamental drivers in the oil market, for example, with the Saudi situation and the potential to weaponize the price of oil. So these markets have some difficult fundamental drivers to try and obviously try to work within. Yes, we are technical traders, so we trade the markets technically, but we do have to take on board the fundamental drivers behind these markets. I suppose there's a concern about the fiscal position in Italy and the impact that could have across the eurozone, and still the potential of sanctions against Iran by the US, and the impact that that's having on oil. And of course it's political season, so in the US, so we've got midterm elections in the US, and we've also got earnings season as things currently stand for the next week or so. So we, like yesterday, there was some negative earnings being released in the US, and it led to a pretty significant devaluation. And we'll have a look at the US equities now very shortly. So definitely some interesting price action yesterday, to say the least. Now we've got the euro dollar just flirting with the 14.62 level. We do have some strong support in and around these levels, and with certainly a break below the 14.32 does constitute a pretty significant move further to the downside. But what we can glean from this information currently up on screen is very much let me just get up my pen. We're still technically in a consolidated market with a slight sort of downward sort of movement to it. So we are getting this market bouncing between these levels. So the next level is this level just sitting here to see if we get some significant movement to the downside. We've already seen a strong breakout there in the month of August, so we've seen a strong devaluation. And if we get a break below the 14.32, we do have the 1300 just below it to provide a little bit of support. So we can watch this market very closely. There's a number of suggestions or reasons to expect this market to continue lower, so we'll be looking very closely at opportunities for this market to sell off. The pound dollar just squeezing lower, as you can see. Yesterday's move to the upside is not really sort of filled with any great conviction. So we're going to look to sell the euro below the 14.32. There's perhaps an opportunity to get into this market a little bit earlier. We're looking like we're heading to the downside after yesterday's kind of reversal price action. So we pushed higher initially and the pound has rolled over. And with some of the news coming out of the UK, logically speaking, it would just imply that perhaps the pound is going to weaken a little bit further. So we can definitely look at the pound dollar to the downside. We're just currently seeing this constructive break lower. And we do have these levels just sitting down here as well. So let's look for the next kind of pullback in the pound dollar and see if we can get in around the 29.68 level. So flying through some of the dollar pairs, because we don't really have an awful lot to work with across many of these dollar pairs. So it'd be more of a case of a pound weakness trade. We've got major news out today. If increased interest rates, the Canadian dollar is likely to strengthen, so we're likely to see this price push over to the downside, so that might give us a good opportunity, even though our ultimate bias is very much to the upside. But what we might see is a pullback before we get the next leg higher. So again, we're going to have to bide our time with that market. If the dollar starts to weaken, the Aussie dollar might be a bit of an opportunity here after yesterday's rejection and actually finishing a little bit stronger. We're seeing continuation today, but we don't have significant confidence really in the Aussie strengthening against the US dollar. Similar situation for the New Zealand dollar. It's far more likely that these markets roll over again to the downside. There's a number of significant drivers driving the US dollar at the moment, and that's why we keep looking for opportunities to kind of sell at these sort of significant levels up here. So that's the Aussie and the New Zealand. So what we'll do is, as far as the US dollar is concerned, we'll keep a close eye on the pound dollar. So we're seeing a little bit of pound weakness, so the euro seems to be strengthening a little bit at the moment. Perhaps not the best opportunities to focus on. Perhaps a more significant one would be looking for an opportunity to sell the pound yen. So we'll come back to this market as well. Euro yen, not so interesting for us. Obviously the euro is currently stronger than the pound, so right now the opportunity probably exists in the pound. So we'll look for opportunities for a pullback to get into those markets. The gold market, we do like this market above the 1233. We've kind of had a bit of a bounce off that as things currently stand. So we do need to, I suppose, just be cognizant really of the rejection of these highs. So that's what we're seeing on a couple of occasions. So, you know, is there more of an opportunity for this market to roll over? Excuse me. Potentially that is absolutely the case. So so that's the gold market. We continue to monitor it as the day goes by. The oil market, really strong move yesterday. We were able to capitalize on a couple of good profitable trades yesterday to the downside. We just experienced some real choppy markets in other markets, so it made it a slightly positive day, but not as positive as we would have liked it to have been, especially with the significant moves that we've seen. But you know, we saw really strong, horrible pullbacks in a number of these markets. So I suppose it's to be expected under the circumstances. But what we do is we like this market below the 65.73. Not quite there yet. A little bit of indecision. That wouldn't ordinarily be surprising after a big long sell-off yesterday. We might get some slow grinding price action pushing these prices lower. So we'll wait and see on those. In fact, it's probably worth just keeping an eye on this market as well, just to the downside, just see how it behaves and interacts with these lows. Same situation for the S&P. We do like this market potentially to squeeze lower off the back of yesterday's complete devaluation. Now, over the last hour, we're sort of extending lower, so we'd like to see this market pull back and maybe capitalize on a sell trade with this market as well. Yesterday, we had a lot of markets to deal with, probably too many, and now we've just got more of a refined number of markets. All of these markets are moving lower. The FTSE is looking quite messy. The Euro stock potentially able to continue lower as well. It might be worth looking at the S&P and the Euro stocks. We are below the weekly low, so this one does look more favorable to the downside, although we're just pulling back off the highs for the trading session just yet. So again, when you look at it like this, it still represents, you know, poor quality price action. So maybe for that reason we'll back off this market again. We would like it lower, so we do think it could approach the 31, 32 level. But I think there's probably better opportunities to focus on. So a little bit better sort of, are easy to identify and a smaller number of potentially good opportunities today. So so the S&P, we look at it in the top right hand corner of the screen. So that's the S&P. We'll also look at the oil market. We'll look at that at the bottom right hand corner of the screen. So we can monitor these markets. On the screen at the same time, and the last two markets we're going to look at is the pound, or continued pound weakness. First one, pound yen, bottom left. We'll also look at the pound dollar to the downside as well. So So there's our trade selections for the session. So we're looking to actually look to sell all of these markets. So we'll start first here with the pound dollar. So we expect it certainly down to the 29.38. We've had a bit of a spike to the upside, as you can see, and a bit of a flush lower. So just going to bring this down just a little bit. So this one's quite straightforward. We want to get in on a pullback. So let's go ahead and try and do that. And it's going to be a similar situation for the yen. What I would like to do is just have a quick look at this. So marginal strength in the dollar against the yen. So for that reason, we'd probably prefer to sell the pound dollar to the downside. Yes, we are getting this move now after a bit of a spike to the upside. We're getting this rollover to the downside now. We do have the 29.38. So we're just going to be patient and just wait for that opportunity to arrive again. So what we're looking for is quite simple. It's the pullback trade roughly to this level in here, and then we capitalize on hopefully the move down to the 29.38. So that same level is actually quite close to where we're at the moment, really, which is the 145.78 level. So so this has been a very erratic market yesterday. When we look at this on a 1 minute time frame, we are straddling the weekly low. So there's a strong likelihood for this market to continue lower. So we might look at a sell trade at this slightly earlier stage. Okay, let's look to get into this, and we've got to make sure we change, of course, our trade size. It just reverts back to the default position. We do have the 145.78, and we've got the 145.80 level just sitting in here. So let's go ahead and sell this market at this price, and we are currently below this level in here. So we just want just at the 145.87, so just at those levels there, and see if we get a little flush lower to the downside. The level that we're aiming for to the downside, if I just share that with you, is we do have the 145.50 level, which is just below it. So got that level first, and the next level to the downside is the 145.28. So so we've got a bit of movement in there for the session. So So we'll let this trade run. So we're currently in the pound yen. We just need that opportunity really to kick in as far as the pound dollar is concerned. But it still represents a decent opportunity lower. Might look at it on the 5-minute time frame. So let's see if we get this next flush to the downside. That's what we're looking to see happen. Right, okay, so moving on to the S&P. What do we want to see in this market? You can see we've had a bit of a pullback off the low. The market has moved sideways, and now we've got that extension lower. So again, the market's coming from highs, and we're looking to capitalize on the next move to the downside. So 2709 represents the significant low from a few. If we look at the daily time frame, it represents this low back in here on the 11th of October, and we're looking to see if we get some continuation to the downside. It's kind of the higher probability trade. Now all we want to do is to get involved in the pullback. If this market pulls back to 27.35, then that will be the ideal level to get into this market. So this one is quite straightforward. What we'd like to see is this market pull back into this level and see if we get that next leg to the downside. So you just got to be a little bit patient in and around these lows. And just the final market, just to review. We kind of want to be selling below the 65.73, even though we are at a nice level as things currently stand, just because this market could swing and continue to strengthen as much as it could sell off. So I suppose a level that we can look at, which is slightly higher, which is the 6600 level. We could see whether we get a little extension lower at this price or not. 66.41, there's definitely pressure to the downside. Okay, it just looks like we're just gonna it's likely to push lower, but this could be sort of an opportunity for this market to actually retrace a little bit of yesterday's move. That's the thing we're a little bit concerned about. What I mean by that is, if I show you on the daily time frame, there's the potential for this market to actually strengthen a little bit today. You often get that with those really strong, really big moves. You can often get a little bit of a retracement. So it's just something to be mindful of. So maybe we'll just continue to monitor the UK oil market. we'll just keep an eye on this trade here. So we're getting the a nice flush lower. Same situation in the pound dollar. Unfortunately, we were interested in selling this market, but that's the breakout trade, and the market is squeezing down quite nicely. So we kind of have to be patient really and just wait for the pullback on that market. But we were able to capitalize on extension lower and the momentum that's just pushing these prices lower, trying to get in on that. And this market has every potential to just sort of continue lower, certainly down to the 145.50 level, and potentially down to the 145.28. So we're going to need to see a pullback at some point. That's why we've got this weekly low, which can become resistance. So what becomes support on the way down becomes resistance on the way back up. So when you get these pullback candlesticks, it's likely to provide a little bit of resistance, and we have our stop loss hopefully nicely above that level. Okay, right, really strong rejection off that lows now. So just to finish off the analysis, we're interested in a breakout below that kind of level there, currently below the 145.78, which is the weekly low. And really, if we look at the UK oil, the high probability trade, for us is actually below the daily low, which is the 65.73 level, even though we're quite nicely above that level as we speak. So there's our breakout trade in the US oil. So this is what we're looking to see happen. We do want that pullback to the 29.67. So we're only sort of 8 pips away, or sorry, 12 pips away from that pullback trade. Same situation for the US oil. So we just want this market just bouncing back to this level. So we just want this market sort of bouncing back to this level here before we get the next leg to the downside. Really strong rejection of the low, so obviously that's a little bit of a concern, but we'll see how much conviction there is from the buyers to support this rejection and see if prices push higher. See who gains control of this market. Okay, so 2 pullback trades potentially in the pipeline and 2 breakout trades. We're already in one of them, and potentially looking for a breakout trade in the US oil market as well. So, so that's the trading. That's our trade plan for the session. We will have a look across other markets now very shortly. So just posted there through our YouTube channel. So do feel free to post any comments that you might have, or if you do have any questions, or perhaps even trade ideas that you'd like to throw at us. I'd be interested to see what it is that you happen to be trading. So do let us know. Happy to look at things like that. So after yesterday's trading, not surprised to be a little bit calmer, perhaps. I suppose this is the calm after the storm. So certainly yesterday, very, very stormy, choppy price action, really strong rejections. So we just need to exercise a little bit of patience now, really. So okay. Not quite getting the kind of the pullback trade as such in the pound dollar. Still nothing between the dollar and the yen. We'd have liked this trade just pulling back an extra 7 or 8 pips, perhaps up to these levels, for it to sort of fit nicely with our view of support and resistance. Maybe we won't get that opportunity. Good morning, Renko. Dollar index is breaking out. Yes, okay. So I suppose it's breaking above. Is it at the 96 level at the moment? Bad numbers for Germany. Okay, interesting. So now we are in a good This is a structural failure to the downside now below the 14.32. So the euro dollar is an inverted picture, obviously, of the dollar index. So with dollar index, you'll just be seeing this market break above the recent highs, whereas what we're seeing here is a breakout below the 14.32. So would look as a decent opportunity. Let's see if we get a constructive pullback. So the 14.22, we're now in this bit of a pullback phase. So let's see if we get a turnaround trade around these kinds of levels in here, we might look for a sell trade. I'll just share with you the news of those events. So okay. So the French manufacturings and services, slightly less on the manufacturing side, slightly more on the services side, and both of these are less on the manufacturing and the services. Okay, so that is kind of responsible for that little bit of an impulsive move lower. So here we go, we're getting that bounce off that level. So let's just see if we just break just a little bit lower. Got to make sure we change. Right, so I'm going to get into this level then, just at this price in here, and see if we get a next leg to the downside. So hopefully this will work for us. We can take a relatively small stop loss on this one. So just a 7 pip stop loss, and if we get a break beneath this 14.22 level, then we'll be a little bit more comfortable. It's a little bit on the tight side, but what I don't really want to do with this low just sitting in here is expose sort of 25 pips on this trade, which would be this kind of level up here. So let's see if we get the flush through on this occasion. If not, we get a structural failure back to the upside, and maybe we look to sell it at a higher price, maybe with another sort of 7, 10, 12 pip stop loss, maybe at a higher level. So it's just the potential to get into this off the back of that news event. We're getting a bit of a flush lower, so that's obviously what we'd want to see. $29.58, $29.45, relatively small risk. Just want to see. Yeah, we're only less than 10 pips beneath the low, but down here, so we're likely to get a bit of support coming in just at these lower levels. So if we get a breakout of the 29.38, either way now, we kind of want to wait for that pullback. We're already in the pound yen, so hopefully we'll get the follow through move on this market to the downside. So we've hit the trade that we were looking for. It's continuing lower, but we do have a strong level of support just below this level. But this pound weakness we're seeing play out in the pound yen. So what we can do is we can just squeeze this trade just in here. This is more of a news trade on the back end of that news event, with a really small, tight, very tight stop loss in this market. So let's see if we get that little rollover. Can you see how it's creating a bit of a floor in this market? So that's quite interesting. So it does seem to be about being a negative pound at the moment. So we're currently in a little bit of profit in our pound yen, but there's still plenty of scope to the downside in this market. See if this market creates a structural failure to the upside, and we're likely to get a bit of a pullback in this market and maybe look again at an opportunity to sell it at a much higher price. So now the pullback's beginning to kick in on the S&P. So today our yen trade to the downside, and also the S&P is a little bit more in line because they're correlated markets. So all that would do would reinforce the strength coming into the yen. It's kind of a flight to safety move, and looking for an opportunity to sell the S&P kind of fits quite nicely with that. Although we're currently experiencing a pullback, but we would be looking for the next extension lower. So let's look at the S&P on a 5-minute time frame, just getting that sort of slow grinding price action pulling back. We'd still like to see this market sort of push back to the 27.35, and if that's the case, it kind of fits in with our view, our overall view. Strong level of support, which can become resistance on the way down. So if we get a turnaround at 27.35, we can probably execute a decent quality trade at that level. So we've got a really small stop loss on purpose on the euro dollar. We want it to perform as per expectations straight away. And clearly it's created a bit of a structural failure to the upside as things currently stand, but we've got a strong level of resistance in here at 14.32. It is the weekly low, and hopefully we will have that supporting or resisting prices. So we're getting that structural failure now to the upside. We've got a 15 pip stop loss in the pound yen, which is much more volatile. So the euro dollar is very likely to continue lower, but we're clearly going to get a bit of a pullback. So a little bit of patience is just required for the market now. There's a lot of resistance in here at this level. We prefer it back to the 29.69. Whether prices will pull back that far remains to be seen. So I wonder if we get the next flush to the downside now. It's looking like it's just winding up a little bit. See, again, we don't really want to have like a 20 pip stop loss on this market if we can avoid it. We do have a natural level there at the 14.35, and it's looking like it's a bit momentum, and let's see if we get just a little flush lower. Right, let's get into this market then. We'll do this for the second time with a relatively small stop loss and see if we get an extended move further lower. So this is an 8 pip stop loss. So This is the second attempt to get into the euro dollar to the downside, both with really small monetary exposures in these trades. We're in the middle of nowhere as far as the S&P is concerned, and it's looking like we might be getting close. If we break above the 66.71, then we're very likely to get a little bit of a retracement of yesterday's move. Which could be worth looking at. So what you'd be looking for is a bit of a continued green candlestick off the back of this, just extending higher. Would you get a 50% retracement on this move? Very, very likely indeed. There is strong fundamentals pushing the price lower, so you know, don't be surprised if it is a little bit on the choppy side, but if you can cherry pick a nice sort of concise entry, could be worth looking at. We'll see if this market represented decent opportunity. It's been range bound within this kind of range here. There's probably been a 10-12 pip kind of range from high to low. So you can almost see the kind of the volatility. We do have the 9 o'clock news. So let's see how the markets are responding now. Clearly with a little bit of negativity at 9 AM for the European flash manufacturing and services data, so these are likely to be a little bit negative as well, perhaps. Yeah, so 53 come in at 52.1, 54.5, and we've got a flash services number of 53.3. So that move is going to support our sell trade to the downside. So hopefully we just get a little bit of an extended move lower. So the new level of interest for us now to see if we get a break below would be the 14.17 level, and that same level will just be sitting in here. So we've had a little bit of a bounce off it, but we would want this market to be breaking through. It's not doing so just yet, but it's just I suppose reaffirming that this second entry is, we've only just got stopped out of it for just a 7 pip loss, but it was worth getting into again at this point because we've now flushed lower. And that is the natural kind of placement now for our stop loss. So the oil market potentially squeezing higher. So if we do get a break above this level, we might look to wait for the pullback and then maybe see if we can push the price higher a little bit. I suppose the reason why we'd be looking at a pullback is because it will be a much smaller stop loss than capitalizing on the breakout, because we'd still have an issue in terms of stop loss placement. So okay, we're going to continue the trading session over at the live trade room, guys. It's just gone past 9 o'clock, so we do have our traders over in another trading room. So we'll switch across. Just to let you know, please do see the details below this video. If you're joining us through YouTube, you're very, very welcome to join us. We're currently offering 14-day free trial, and you can access a whole variety of different live trade rooms at different times of the day. So hopefully you can join us for some of those. And we offer over 76 live trade rooms per calendar month. So what we're aiming to do is to provide traders with a real solid foundation in terms of surviving the markets long enough to be able to learn how to trade them. It is a profession. It's not as easy as other educators will make you will make it seem. It's not about being a millionaire by Christmas time. It's about learning the skills. So if you would like to join us, there's no need to be apprehensive. You're very welcome to access 14 days completely free of charge. And then if you want to become a member of ours, it's just $9.99 per calendar month. So we do hope you find that incredibly affordable. And that's the way it's been designed. And all that does is just contribute towards your access to a whole variety of different traders, and also different trading methodologies, and at different times of the day as well. So so hopefully you'll find that quite useful. And we've constantly got a stream of new products and services coming online as well. So well, hopefully you can join us shortly. So we do need to switch across. So we're currently just getting a bit of a pullback on these two trades. Let's see if we get that next flush lower. We want to keep a close eye on the 145.55. That's quite an important level. So we want to attack that level with a high degree of conviction, and then we could be in a couple of nice trades to the downside. So hopefully we'll get those opportunities. So thank you very much for joining us. We might see a bit of a buy trade in the oil market above the 66.71. We'll just have to see how this market pans out, and we are looking to sell the S&P ideally at the 27.35. So hopefully there's a few good trade ideas for you to work with there. So thanks very much for joining us. Please do give us a thumbs up if you can, and subscribe to our channel. And you can also connect with us through our Facebook, Instagram, Twitter, and LinkedIn. Details are there up on screen now. So thank you very much for joining us. As always, do take care, and we look forward to seeing you next time. For everyone here, bye for now.